Welcome back to Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy. Every now and again, it's that black and white jacket that gives it away. Folks ask me, do I actually wear black and white on the weekends? And I do. I know it's a little weird, but you got to keep the brand going, right? Who knows? They might forget about me. Why don't we take a look at how these things are going? These markets are your money. Let's not laugh about that, and let's see how we're doing here today. Corn giving back some real estate, but we do see the deferreds higher. The front month off 8 3/4 cents at 6.27 1/4. That would be the March contract. Well, we've got May off 6.5 cents at 6.26 3/4. But we do see new crop forging ahead 2 1/4 cents at 5.71 3/4. You know, those are good price. Well, that's pretty good prices before we start planting. I got to say that. All right, let's see what's going on in soybeans. Look at this. We've got a decent board in the soybeans. 7 1/4 cents higher in that March contract. 14.77 1/4 is last. But you know what the really big takeaway for me is? We were about 20 cents higher than this overnight at some point. 8 1/4 cents higher in May. 14.83 1/2. So that's a good board, but it has been better. But I tell you what, in this day and age, we'll take it, right? Chicago wheat kind of giving back some real estate. 14 1/4 cents lower in that March contract. 7.72 even is last. May is off 13.5 cents at 7.77 1/2. That one's kind of making it look like things have kind of cooled off, maybe in Europe. Who knows? We'll see with our next guest analyst. He's everything Europe. He'll know the answer to that question. 13 cents lower in the hard red wheat in Kansas City. That's 7.89 1/4 last. We've got May off 13 cents at 7.92 1/4. Okay, that's Kansas City. So far, so bad. Wheat's having a tough day here. Let's see what's going on in Minneapolis. And again, this is the same vein throughout. March off 11 cents in Minneapolis to 9.09 1/4, or about 2 cents off the lows. We'll keep an eye on that for you. May's off 11 3/4 cents at 9.05 1/2 in the last. This one will probably warm you up here. This one's on fire on a cold day. $1.78 or 178 points higher in that March contract for cotton. 125.54. But look at that. That's had a huge range today too, about a 3-cent range. So that's some good going. All right, let's bring on our on-site guest, Chris Swift from Swift Trading. Chris, thanks for joining the show.
Good morning.
All right. What's going on in wheat? Do you have any ideas?
Some of that moisture that Tim probably showed coming in this week with the snowfall kind of dampened it just a little bit, and Russia's still yet to invade the Ukraine. So I think that's probably all there is for the wheat market.
What about beans? What are your thoughts there?
Corn and beans are real interesting because we know that a lot of production cycles are coming to an end, and a lot of these companies were unable to replenish those stocks when we had the harvest lows. And so they thought, well, maybe we'll just go hand to mouth and see if the price doesn't go a little bit lower. They have been caught ever since then, paying a higher and higher price. And last week we saw some pretty significant rallies in corn and beans, and I think they're probably wrapping up, what they need for this next round of cyclical production.
Right. So, we had an analyst on last week, and it was interesting. He penciled it out for us. And had you not done anything yet, right? So you didn't put anything on the ground in the fall. Mm-hmm. It was pretty hard not to plant beans. I mean, beans looked. I don't want to be too, over the top, but it was almost overwhelmingly in favor of beans.
Sure.
But yet, beans are still buying acres here. What do you think?
Well, we saw natural gas Friday go off the board $3 higher on the spot, and today it was up another 2-3%. Mm-hmm. So all of those input costs are just going to be that much more, and I think we need all of it. I think we need all the acres for both beans and corns, and maybe just not going to get them.
Well, it's your fault for bringing up energy, because this is one of my worries too. We've got the Federal Reserve Board kicking off this, campaign of higher interest rates, right? Mm-hmm. And a large part of inflation, because they want to raise interest rates to kind of carve out inflation but not hurt the economy. I don't think that's going to. There you go. I can tell by your laugh that you don't think that's going to happen either. So that's kind of like, unfortunately, the best way I can describe that is it's like chemotherapy. It just kills everything.
Sure.
Right? And that's what higher rates are going to do. But part of inflation, a large part of inflation, and an overwhelmingly large part of inflation, is food and fuel costs.
Sure.
And we're sitting at this desk all day, every day, and I'm thinking to myself, if we continue to see energy rally and food prices rally, is that going to negate these interest rate hikes? So don't answer. We got to go away, pay some bills. But something to chew on while we're at the break. All right, we're going to go away, pay some bills. We're right back with Chris Swift from Swift Trading after these messages. Welcome back to Market Day Report. I'm Scott Shellady. Thanks for joining in. We've got an on-set studio guest. We're going to go through some of these livestock prices to see what's been going on over there, and then we're going to have a comment for you real quick. Okay, how about this? We got that live cattle market in Feb up 92 cents at 139.62. April's up $1.07 at 144.17. We'll see what we've got happening in feeders. That's another one That's pretty interesting as of late. Feeder cattle, look at this, doing some good work here. Now, I have to pre-apologize. I do like to see these prices higher for the producers. I was always a producer in my family, and getting out of bed a producer for 50 years makes you I'm not wishing any bad things on consumers, just saying. $2.87 higher in March. Feeders at $162.50, while April's up $2.45 at $167.75. Okay, 2 for 2 in that area. What about lean hogs? Do we have any joy over there? We do. February's eking out a small gain, 52 cents higher at $88.45. And April's eking out, well, that's not an eke. That's a $1.10 range, a higher board at $96.05. Okay, Chris Swift from Swift Trading. Chris, thanks for being on again.
Yes, sir.
What? First of all, the question I left you with going home or going to break was, could we see, with food and fuel being such a large part of this inflation problem, could we see a lot of that being negating this campaign of interest rate hikes?
Oh, I think so, because I don't think interest rates are the problem to begin with. So until we address the problem of stifling and restricting the transportation and distribution of goods, then things kind of go back to normal again. And that's what we seem to be doing, is stifling and not letting anything move in ways that it should.
Well, the dangerous thing you're saying there is we're in agreement, which is always going to be something I got to worry about. All right, what about livestock? Anything jump out at you there?
Really, the drought is probably it. We're pulling a tremendous amount of wheat pasture cattle off of the wheat right now, simply because of the drought. We saw what wheat prices have been doing. Even as of last night, they were higher until this morning. But all of those cattle that are coming off early, we've seen a little bit higher December placement. We'll probably see a higher January placement. And then after that, we're going to start being more void of animals going forward.
And anything you see on the horizon that could, I don't want to alleviate, but see prices kind of tail off and kind of come back down a little bit?
Not right offhand. I think beef prices might come down just a little bit, but I don't think cattle prices, we have a small amount of glut in the feed yard right now. We'll get that worked out hopefully within a couple of weeks. And then after that, we've got greater packing capacity and we'll have fewer animals to work with for the rest of the year.
That's good stuff. And then the last thing I'll say is that, we've got a bad start to the year in the equity markets, and sometimes that'll flow over into livestock a little bit. Do you think that could put a damper on anything?
I don't think so right now, because it seems like there's just so much money available to everybody that money's not the issue right now.
That's true.
There seems to be plenty of it.
With me it is, but with everybody else it's not, right?
There's plenty of it.
All right. Thanks very much. That's Chris Swift from Swift Trading. Thanks for being on the show today,
sir.
Chris.
Always
I'll throw this one back over to Janet.